All right. Good morning, guys. Good morning. It is a beautiful morning. It is a beautiful Thursday morning. Good morning. Good morning. Something always, I don't know why. I always like the number seven. So I don't know. It's like a weird thing. I got something wrong with me, I think. There's definitely something wrong with me. I like the number seven and I love multiples of seven. So 7, 14, 21. Those are always good days for me. I don't know why. Yeah, that's definitely there definitely is something wrong with me. But good morning, guys. Happy August 21st. It is a beautiful August 21st. Welcome in. Hope everybody has had a nice Wednesday and is ready for a beautiful Thursday. A lot to go over today. A lot of volatility. A lot of volatility yesterday's session. You guys saw it yesterday. It was intense. Okay, but there was good price action. Okay, now it's just a matter of, do you have the levels in front of you, and are you prepared for the market before market opens, and are you disciplined enough to wait for your levels? And that was something that kind of got me, almost got me yesterday. I almost gave up yesterday. I took a little bit of an early long yesterday on SPY. And then I also took longs at the lows, and I actually got a really nice long. I also got shorts yesterday. Yesterday, I made good money, and I'm sure a lot of you guys, if you were also prepared, also made good money, because again, it was about the market preparation combined with the discipline that resulted in price action being enough to catch something. Okay, and we are going to talk about that yesterday on SPY. Okay, and what you're seeing right now on SPY is you are seeing a perfect response to our levels. Okay, yesterday you saw downside the market. Okay, you saw downside in the market under key levels, and my face is humongous right now. So what I'm going to do before we even do anything is, you see me right now. Now you see me a lot less. Okay, there we go. Beautiful. That's where I should be. Okay, so yesterday's session, you guys saw the market respond to key levels. You saw the market break down under key supply zones, and you saw us basically trend down aggressively lower in the market to our key demand. 11 o'clock, demand held. We rallied higher. We went into a supply zone, intraday supply zone, not a big supply zone, intraday supply zone. And then what did we do yesterday into close? We closed at the critical supply zone again. And this was an area, someone just asked me, Brett, why did you short the S&P? Why did I short SPY into close yesterday? I shorted SPY because we were at a key level. And I'll show you every place I took SPY trades yesterday was here. I'll show you every single trade I took yesterday on SPY. I long SPY right there. I long SPY right here. I shorted SPY right, I'll show you. I shorted SPY right there. I shorted SPY right here. Okay, those are the areas that I traded SPY yesterday. Now, remember I said something so important to you guys. What have I said that probably one of the most important statements I've ever said on the live? And it's not just important for you guys, it's also important for me. If you were to look at the chart yesterday, and this is every place that I took a SPY entry, long, long, short, short. I made money in this one, I made money in this one, I made money in this one, I made money in this one. Okay, so yesterday it was actually quite a nice day, right? But where are the good trades on SPY yesterday, and where are the bad trades on SPY yesterday? Because just because you make money on a particular trade doesn't mean it's a good trade. If I look back at this yesterday, I'll tell you exactly where the good ones are and where the bad ones are. This is a bad one, this is a bad one, this is a good one, this is a good one. This one is maybe okay. It's maybe okay because at least you're going with the trend of the day in your view up projecting, right? Maybe this is a little bit better. This is like a 6 out of 10 or a 7 out of 10 quality. This is a 5 out of 10 quality. This is a 10 out of 10 quality. This is a 10 out of 10 quality. Why am I saying that? I'm saying it because about a month ago, I said something on live. I said, if you are finding yourself after you're done trading for the day and you go through and you mark every single entry and exit you made on that chart, and you find that you are entering not at key levels, then you are doing something wrong. Okay. And so when I look at the market yesterday, I took some entries that were not really in between and not really at my key levels. They worked, but again, the real big levels were here, and this was where the big trades happened. So if you were to ask, why was I long here? I was long here because there's big demand. Why was I short here? Because there's big supply. And we are going to talk about these things today. Okay? This is the most important thing about today's session. It's not what we did yesterday that matters. It's what we're going to do today that matters. We're going to analyze the SPY today with the mindset of, what is this now? Okay. What is this market now? And is this market different from what we've seen before? And the answer is yes, it is different, right? This is a different market. Why is it a different market? Because before we were analyzing the market in the eyes of an uptrend. We were analyzing the market in the eyes of an uptrend, being the fact that we are pushing higher lows and higher lows and higher lows, higher lows, higher lows. And then yesterday's session, right? We technically lost our higher lows. And we are now forming what I would consider to be a downtrend, in which case we analyze this on the highs, and we look at this as lower highs, lower highs, lower highs, lower highs. And so now the trend of the market, the grain of the market is bearish. Okay, so we're going to talk about that. Now, granted, it doesn't mean you can't trade longs in a bear market. I traded longs yesterday, but only at a key level, right? So today's session, we're going to talk about the idea of us being in a bear trend and where we're going to go to and what we should be looking for in bear trends. Okay. Again, I'm not saying you can't trade longs in a bear trend. You can. You can trade shorts in an uptrend. You can. But again, the grain of the market is now bearish. Okay. So we're going to talk about this today here on the SPY chart. It's very important because this is a switch, a flip. The flip of the switch has occurred, right? And we are now trading with it. So let's see what happens here in SPY. Okay, we'll go over ES's chart. We'll talk about ES. We'll go over Qs. QQQ, same idea yesterday. Look at the Qs yesterday. This is untouched. This is untouched. 560 demand, 566 supply zone. These are the levels from yesterday's session, and look how perfectly they're respected. If you missed the opening, this is so important, okay? If you missed the opening bell downside yesterday, this is so incredibly important. If you missed the opening bell downside yesterday, I didn't take this. I did not short the market yesterday. I didn't short the market yesterday until here and here, okay? So for me, yesterday, I missed the opening bell short. Okay, but if you missed the opening bell short, what are you doing? Are you twiddling your thumbs waiting? Yes, you are, right? You are literally twiddling your thumbs waiting for the market to pull back to either a key demand zone, right, to go long off of, or you're waiting for, again, that supply rejection, back at supply, back at supply, back at supply, back at supply. So this was the idea yesterday. It was not only just showing up with levels in front of you, but it was also how disciplined were you? Are you disciplined enough to wait 3 hours for your levels to hit? If you're not disciplined to wait and you're there, going crazy, then this is where things can become interesting, right? Things become a little frothy, right? So we're going to talk about today here in the Qs where our levels are. That's the big stuff. There's a lot to go over this morning, okay? We're going to go over Nvidia. We're going to go over, AMD, of course, AMD 160. Big potential hold yesterday. What's going to happen today? We'll go over Tesla. We'll go over Meta. We're going to go over Amazon. We're going to go over Apple, right? There's a lot of stuff to go over this morning, and we are going to talk about it. We'll dive in right now. So let me just make this smaller, and I want to zoom into this. So economic side for today's session, it's 8:42. We were way late today, 8:42. Let's go quick through this then. Thursday. So Thursday, today's session, we have jobless claims 8:30. That was about 12 minutes ago. We had other data, PMI 9:45. Existing home sales 10 o'clock. We have more data today on top of this because we also have the Jackson Hole Symposium, right? It's the Jackson Hole Summit, which is today. It is today, okay? So be careful of that. Obviously, you're going to get data sprinkled in randomly. You're going to get it. You're going to be long SPY 0 DDE, right? And then all of a sudden, someone says something bad, and now you're down $1. Okay, so just be careful. You have headline risk today. You heard it here first. There is headline risk here today. What does that mean? It means you either size the hell down or you have risk tight. That's it. That's all you do. You don't have to size down if you keep risk tight, and vice versa. Okay, just at least do something right. At least either size down or keep the same size and keep risk tight. Again, I know it kind of sounds stupid to say that, but you don't have to size down, but you do need to keep your risk tighter if you are not sizing down, which means have tighter stops essentially. Okay. Friday, tomorrow, Jerome Powell speaks as well. This is going to be big. Be careful going into our Friday session. Earnings reports for today's session, Thursday, August 21st. In the pre-market session, we have Walmart, WMT. That's all we have for today. Tomorrow, we have BJ's in the after hour, or BJ's pre-market, maybe ZM after hours today if you want to watch that. But that's all we have going into our docket moving forward. This is something I want to show you guys quickly. I'm not an economist. This is not why I'm showing you this. I'm showing it because I want you to see what the market is anticipating right now. This becomes more important tomorrow. Jerome Powell may hint at some things which will impact this. Right now, 82.9% chance of rate cut for September. I think it's interesting to see that the majority of traders are anticipating a rate cut in September. Let's see what happens during tomorrow's session when Jerome Powell speaks, because of course this number can change, and I want to see what happens. Again, nothing important here, just want to show you the number, right? So, okay, SPY chart. SPY chart yesterday. So what's going on here in SPY? What's going on here in SPY yesterday was basically the idea that we just simply moved from level 1 to level 2. Okay, we moved from level 1 to level 2, almost a picture perfect level to level move. Now, here's the thing yesterday, right? Like I was saying a few minutes ago, was, how disciplined were you? Okay, because if you chased the shorts yesterday off the open, it actually was quite nice. You would have gotten a good move. And for me, I'll tell you this: if I were to reassess how I traded yesterday, I was happy with my long yesterday at 11 o'clock. This was the best possible trade I had taken yesterday, but I wish I would have taken some of this right here. And sometimes it is about preparation, right, in the pre-market, like we just talked about, but it's also about on the fly analysis. Okay, so on the fly analysis meaning like you're there in the 5 minute and you're sort of reading the intraday price action, and the question becomes, when does this turn from being a bear market to a bull market, or a bull market to a bear market? And yesterday in the pre-market session we said explicitly, hey, don't short SPY into 639, right? Because 639 is key demand. And so for me, knowing that, I didn't short SPY into 639, but we did break below it. And this is so important, is on the fly analysis. You see the market breaking under 639, developing these pin bars. That's your short right there. This is the candle that says Brett go short. Now, sometimes you get the Brett go short candle, or whoever you are, right? You get the Ray and everything, the Draco or Sue go short button, right? It says, oh shit, go short here, 5 minute candle, and you don't go short. Now, when this candle happens, and the candle starts moving in your direction, right? Okay, it's trading moving in your direction, and now you see, oh shit, I really should have gone short that candle. You can't just chase this now, because now your risk reward is skewed. What do you do now? Do you short at this candle and have a stop loss over there? Now you're risking this much when your risk should have just been this much, right? Should have been a lot tighter at that moment in time. So you miss these trades, and the question now becomes, now that you've missed these trades, what do you do going forward? You have to remain disciplined and wait for the next level, which in this case on SPY was back at demand lows. And that's why yesterday when I went long the market, it was here, right? This is where you can really develop those long ideas, and that's where the market begins trending in your favor. But again, even though the market longed off demand yesterday, it doesn't mean this was your A+. I mean, this was a good trade, right, off of demand. But look at the grain of the market right now. Let's analyze the grain here of the market and get an idea of what's going on. Well, what's going on right now is we have still a 639 supply zone as technical supply. And this is interesting. Again, why? Because we had the uptrend for a while, and now we are simply just in a downtrend. And the question becomes, where do we go to? Well, at this point in time, the way we analyze uptrends is we look at previous demand zones for holds, and we look for breaks of resistance for breakouts. Well, the same thing for downtrends, but you just flip it around. Okay, so for this environment, we're looking for rejections here at 639 for puts, or we're looking for a breakdown under PDL under 633 for shorts, and that is simply all you're doing today to remain in the grain of the market. Now, I'm not saying this though. I'm not saying we go short right here, because again, this is still a hold spot from yesterday. Don't go short there. But you do want to look for shorts here at 639. You want to look for shorts here at 633, under 633 for puts, and that's all I have for today's session here for short side. For longs, I really want to see the market back above 639. For me, this is what I want to see. I want to see the market retain above 639. If that does happen for whatever reason, right, then this is a long opportunity and upside trade. So watch to see if we can get back above 639. But if we can't, we are in a bear market. This is a bear market. You're looking at a bear market right now. It is simply that. Can you scalp calls in a bear market? Sure, you can. But the grain in the market is bearish as we speak. And again, that's why we're moving down right now off of a 639 rejection pre-market. So let's see what happens. I think we probably go to 633 today. The question is, do we break it? Okay, because I don't want to be short here. I want to be short there. That's where I want to look for shorts. Okay, that's all I'm looking for today on this SPY chart. ES chart, and we're gonna move fast now. So ES chart. I mean, can you beat it? Right? Can you beat this? Can you beat this? Look at this. From demand 1 to demand 2 yesterday. Broke down quickly after the open, Longs at demand, they worked back higher, but of course we closed right into supply zone 639, 6420 ES, our big golden zone here in ES. We rejected it, and now we're seeing some short-term reaction here off supply. Where do we go to at this point? I think we probably do this. I think we probably go back down into 63.55. That's what we're headed to right now. But the question is, what do we do at that 63.55? What do we do with these demand lows? Do we break it? If we do, then we're going back down to 6,300 ES. And on SPY's chart, if we break back below 633, where are we headed to? Okay, if you go back to the SPY chart here, we're headed to these lows here. Okay, we're going to 628, 629. You can probably argue we're going to 630 first because I could see 630 as a small level. So what I'm going to do is I'm going to have this drawn in, 630 as your level 1, and then 628, 627 as your demand 2. So where we're going to under these lows is here and here. And then back to ES for a second, where we're going to under these lows is here, 63.25, and here, 6,300 ES. That's what we're going to. And at this moment, it's not only these lows and these lows that we're going to, it's probably back down into these lows that we're headed to, right? That's, I mean, again, no bias here, just levels, right? We're just going over what's happening here in the market. I'm not saying you can't scalp calls today. You can, but you got to do it at a level. If you were scalping calls before then yesterday, you got smacked around, right? Look for longs back at levels. I mean, today's session, if you see us flush back into 6,300 ES, it's a long, right? It is a long today, right? So look for longs off key demand zones. Let's see what happens today. But of course, the gray in the market right now, as long as you're under that 64.20 ES, is a demand zone. 64.20 key supply. Okay, so let's move on, guys. Let's go over the Qs. On the QQQ, very simple. Again, you look at the chart yesterday, and hindsight trading is always easier than like trading it intraday, of course, right? But you look at the market yesterday, and you can see what the market did. The market yesterday flushed under 566 demand zone, which was our key demand yesterday. As soon as we flushed below it, we just broke down. We sold aggressively, right? There was no retest here. It was just a flush all the way down lower. We sold back into demand zone, right? And you should not have been short back into demand. There was a moment yesterday where I said, guys, I'm looking for longs. I think Rav and I were looking for longs yesterday back at this demand zone. And there was a moment where someone said, Brett, why not just buy puts? The market's trending down. If you were going to buy puts, the put entry was right here, or the put entry's here, or the put entry's there. But the demand entry, and this is a horrible drawing for people who are just tuning in, they probably think I have something wrong with me. But the long entry was here. This was where the longs were, and this is where, again, you saw the market rebound. Now, today's session here in Qs, we are still back under 566, which is still a big supply zone. So your mindset today should be 566 rejections, 566 rejections, 566 rejections. And if we're under 566, we're looking for what? Rejections, right? And we're probably going to move down lower into 560. If we lose 560, this is your short PDL, bam, down lower, okay? I'm looking for that today. I don't want to be doing this though. This is the one thing I don't want to do. I don't want to see the market trending down lower. Oh my God, we're flushing. We're going to flush down lower. We're going to flush down lower. And then we say, let's buy puts right now because we're going to flush down lower. And then the market does this because that is what's going to happen if you start doing that. I don't want that to happen. If I'm looking for shorts today, it's either here or it's there. That's where it is today in the Qs for me at least, right? That's what I'm seeing here on the QQQ chart, okay? Let's move on. Does this make sense, guys? Am I making sense? Is this making sense? I know I'm going a bit fast today, but I hear some people in the chat. What are you guys talking about? Everyone's okay, cool. It looks like everyone's following along, right? So, AMD, first ticker of today's session. On the first ticker of today's session, AMD is interesting because AMD is sandwiched in between two levels. And this is the problem right now. There are some names that look great. There are some names that don't look so great. AMD doesn't look so great, okay? I like AMD on reclaims of 168 for longs, but this morning you're seeing some display of strength, right? Yesterday's session, you saw AMD not only bounce off demand, but you saw AMD actually flip green in the session, which I think is really important. So AMD for me, I'm watching for two things. I'm watching either for above 168 for longs. If we clear 168, I'm looking for longs back in 175, 174, or I'm looking for shorts back under 162 for the failure play and to move down lower into PDL and potentially 150. That's all I'm looking for today here in AMD, right? AMD is a big mover. My no trade zone is here. This is where I don't trade this stock. This is the dead zone. I do not want to get involved in AMD between 168 and 162. If it can clear 168, look for longs back to 175. If it fails below 162, break and retest, and looking for shorts back into PDL 158. Again, very simple chart here on AMD. A little bit interesting yesterday, right? I actually was going to long this, but I chose to long SPY instead. I was going to long this over 162. It ended up working out pretty nicely. But of course, today's session, we have to see, do we retain above 162? If we are, we're bullish. If we can get above 168, we're definitely bullish in upside trade. So watching that today as a top watch, okay? Nvidia. On the Nvidia chart, Nvidia yesterday held demand, okay? We held demand yesterday at a key demand zone at 168, and we have now done quite nicely in this one. It's moved really aggressively to the upside. But where are we? We are still back under supply, back under supply, back under supply, back under supply. I am watching for supply rejections today at 178.50 to 179. I'm still watching this. This is what I was watching yesterday. I'm still watching this today in Nvidia. This again would be a lower high forming here on this Nvidia chart. It's a trend-based entry at supply zone, hence I'm watching it. Okay, it's all I'm looking for today on this Nvidia chart. Would I trade it in between this area? Okay, under 174 today on Nvidia, you do have downside back into 168. If you want to be aggressive today, you could look for that too. Okay, I probably won't be aggressive today, to be honest with you. I'm not going to be. I'm just going to be transparent with you guys. For me, yesterday's session was, it's just once in a month type trading yesterday. And for me, I'm probably going to size a little bit lower today and maybe be a little bit less aggressive. But if you want to be aggressive, do it, right? Just because I'm saying I don't want to be aggressive doesn't mean you can't be aggressive. Look for shorts under 174 today and on Nvidia back down to 168. It's a good trade today. It's a good bowed short for today's session. Also look for shorts back at 178.50, 179 for a move down lower. This is only bullish back above 180. So we can trade this short back into rejection spots and also under our lows for a move down lower back into PDL, okay? The key thing to note today is, here's the one thing I want to say. Across the board, PDL, what does it mean? Previous day low. I'm stealing this from, I don't know who I'm stealing this from, but it's an acronym from someone. It's either from Carmine, it's from Trade Brigade, or it's from Vincent Desiano. I don't know who I'm getting it from. It's one of them I'm stealing it from, whatever, I don't care. PDL, that's the acronym you guys have to understand because I'm using it a lot now. But under PDL, sorry, at PDL today, you don't want to be short, right? And it's just across the board on any ticker. On any ticker, you don't want to be short back at PDL. Look at SPY PDL for a second. Just going to flash back to it. PDL on SPY is 633. It doesn't matter if you start trending down lower today. Don't be short back into PDL. Don't be short back into 633. Qs, again, same thing. On the QQQ chart, don't be short back into 560. You want to look for the breaks of these PDLs for downside today. So again, just a key thing to note today's session is very important is be careful back into that PDL, right? So maybe that's like an ICT thing. It could be an ICT thing. I don't know. I'm taking it from somebody. I don't know. Okay. SMH on the SMH chart. Here on the SMH chart, you can see downside, right? So obviously a little bit sad here in SMH. The head and shoulders turned out to be the case. You saw a breakdown on our neckline back into 288. We lost 288. We went back into 283. This is why I love trading, because I just look at these levels and they just are just so perfect, right? You can see 288 broke. We sold back into 283. We held 283. Now we're back at 288. So here at this moment on the SMH, what are we doing? It's still bearish, right? I mean, you have a high here, a lower high here, a lower high here, a lower high here, a lower high here. As long as we're under 288 now at this moment, we are downside facing and looking for a move down lower. No, Fancy, it is definitely not from Tory Trades. Trade Brigade, Carmine, and Vincent Desiano, those are all good traders. That is probably why, I mean, I would recommend all three of those ones. Tory Trades, I'm not going to say anything. Okay, I'm just going to leave it at that. Those three that I said, those are all three great traders. I'm going to leave it at that fourth one to if you guys make your own opinions. Okay, so moving on. Tesla. You know who's good though? Massey Trade is good. I don't know if you guys heard of Massey Trade. She's also pretty. She's good. 327 on Tesla, very important. So yesterday's session, 327 rejections. I think this is the key thing to watch out for today. The reason why I'm saying it's important is because you had key supply, key supply, key supply, key supply. 327 is your big supply zone. I would be careful longing back in 327. You guys know this is obviously a big supply. If it can get back up at 327, upside. But for now, I think this is one we stay away from. Now, granted, let's see what happens here. But as long as we're under 327, I think we shouldn't be. I think we should. I think it behooves us not to go long in this chart as long as we're under 327, because again, you can see supply, supply, supply. Right, that's a big pivot. I want to see us back above 327 for longs. If that happens, I can look for an upside trade. Okay. So, am I saying I don't want to learn from her uncle? Yeah. Okay. All right. So, moving on, guys. Let's move on. Let's do Apple. Apple chart. Apple chart. You know what's crazy? What's crazy is as soon as I said that, my view count just went up 150 people. It's like people like drama. People don't like levels. They like drama. That's what they want. But you're not going to get drama out of me. I'm not going to say anything bad because it doesn't matter. So on Apple, I like Apple even in market downtrend. I don't care. Why do I say I like longs on Apple even though market's in downtrend? I don't care, because as long as Apple is an uptrend, I'm happy. I am comfortable. This is really important. On individual names that we're trading, okay? When I say individual names, I mean your names outside of your indices. I am comfortable trading longs on relatively strong names in a weak market environment, okay? Just like you should be comfortable trading shorts on a relatively weak name on a bullish market. Okay. And again, that's a very important thing to understand. Somebody asked me that like a few days ago. One of my mentees was asking, Brett, why did you trade Tesla? I think it was because I traded Tesla longs on I think it was Wednesday or Tuesday. And they asked, or no, it was Tuesday. And they asked, Brett, why did you trade Tesla longs on Tuesday when the market was weak? Well, it was because Tesla was an outperformer, right? And so like that same thing here is the case. Apple right now is an outperformer. Why is it an outperformer? Apple has barely moved down lower. Apple, look at this for a second. For example, look at the August 7, August 8th highs. Okay, you can see August 7, August 8th. We are up 2% since our August 7, August 8th highs. And you compare that to SPY's chart. And we go to where's August 7, August 8th? August 7, August 8th is over here, right? So we are obviously well below our highs here, or sorry, our key level here. You can see August 7, August 8th, or that same period, SPY was at 539, right? And we're obviously lower than that. And on the Apple chart, we are well above it. So when you see charts like this, I'm actually comfortable going long here, but it's got to be at key levels, of course, right? So for where I'm watching for longs is going to be here at 221, here at 221, or here at 216, here at 216. As long as we're above this 216 level, I'm looking for longs there. I'm looking for longs here, right? So that's what I'm doing today here in Apple chart, looking for longs both those two levels, right? So let's move on, guys. Let's move on. Let's go over a few more. Let's go over Netflix. Netflix, obviously, supply rejections yesterday, or not yesterday, but it was a Tuesday session, I think, at supply zone, and then obviously back into demand yesterday. Don't be short this stock right now, as long as we are above 1,200. Okay, I said it yesterday. I say it again. 1,200 key demand zone at 1,200. This is a long here. Let's not get caught up shorting back into demand zone, right? Here, Netflix. Moving on. Let's go over more. PLTR. You guys got what you wanted, right? You guys absolutely got what you wanted. And I mean, this is why I love trading, is because you can look at any ticker yesterday. Look at this yesterday on Tuesday session. I just love this. Long 161, fail 161, break, retest, short, downside move. I mean, just incredible price action here in PLTR. The question now is, can we stay back under 161? This is your key supply zone, right? This is your key bull, bear, pivot. If we are under 161 here on the PLTR chart, you are bearish. It is simply just like that, okay? If we are under this level, we are bearish. You should be looking for shorts here, 161 for downside moves. If we get back above it somehow, and expect us to go higher back into 178, which is again your next level of rejection spots. Okay, so that's what I'm watching today on PLTR. As long as we're under 161, we are bearish. Okay, where is it moving to? If it fails down lower here, if it's like bear flags here or whatever you want to call it, is not a bear flag, but if there's bear flags here, right, and moves down lower, then this goes back down to 145, which is your next big level, your PDL. Okay, PDL again. PDL. Why am I drawing it out? I don't know, but again, that's where we're headed to, right? So moving on. TGT is, unfortunately, right, it is still not so hot. Okay, so my average on this is dead flat 100. That's where my average is here on TGT. So I'm okay right now. I'm only down at like 2 or 3%. But I really want to see this back above 100. If it can do that, I like it. But as of right now, this chart is mostly bear facing, and I know it, and that's it. Okay, so I'm going to leave it alone. I'll look to add more here, right? If it gets there, I add more there. If it doesn't, then I look for it to reclaim, and that's it. So I'm watching that for target. But again, probably just going to be a sitting duck right now on target. Nothing to do here. Just have to watch and wait. Okay. Moving on. What did we do? We ate yesterday. Let's get today. Yes, Rocky, absolutely. HIMS, HIMS, HIMS. Sometimes I reserve the right. To say nothing. And on HIMS, I am taking my little. I'm taking my rule there, and I'm saying nothing because when I see nothing, I say nothing. That's simply what it is. Amazon. Amazon. I already went over Amazon, right? Did I do Amazon? No, I didn't do Amazon. I did not do Amazon yesterday. So, what did I say about Amazon yesterday? I said Amazon 226 bounce. I'm going to be all over it. And look what Amazon did. I will tell you when I'm right, and I will tell you when I'm wrong. I was wrong about Amazon yesterday, right? Amazon fell right below 226 pretty quickly. Granted, I don't think anybody should have taken this bounce yesterday because was there a moment in time where Amazon looked like it was holding 226? Look at the 5-minute. Did it show you any retention of 226? Not really. Maybe 930 it did for a second, but it very quickly flipped underneath that level and obviously fell back lower. So hopefully no one took Amazon longs, even though I did say it was watching for longs yesterday. Obviously we fell back below 226, and this moment in time here on Amazon, what are we right now? We're bearish, right? We are bearish as long as we're under 226. So this is a bear chart. Fancy, thank you very much, Fancy. Much appreciated. You are always a big supporter. Thank you very much. Ray, what happened to Target? Target was an earnings gap down. Okay. So how did Brett just skip Meta? Because Meta has not made me $1. Okay. Meta, I don't make money in Meta. And for some reason, I always forget about it. But I can see Meta is at key level. I mean, this to me is interesting. This to me is very interesting. I mean, if I'm a Meta trader, if I'm a Meta trader, I'm all over this today. Okay. Look at this. If I'm a Meta trader, I'm trading this long. Simply, as long as we're above 738, you can see 738 previous all-time highs, 738 bam, 738 bam, 738. What's happening right now? Is this potentially your long opportunity on Meta for an upside trade back in highs? That is your trade. If this can hold here at 738, I'm not saying it is yet, but if it is holding here and you see it basing, go long, look for upside trades. Right? So guys, that's it. I am gonna leave off here. Thank you all for joining in. I appreciate every single one of you guys. Let's have a good day today. Let's keep pushing. And I'll see you guys all for live trading. Bye, guys.